Ladies and gentlemen, welcome to the Unnamed, which is slowly becoming the name of it, podcast. With me is the great and powerful Brad Freeman, the stock market nerd, and the faceless but still pretty cute Evan, stock market news. How do you like that intro, Evan?
I'm good with that one, actually.
Yeah.
Happy with it.
All right. So today we're in a mix of some pretty interesting news, but a lot of gray area. But hopefully we'll get some ideas from Brad and Evan on what is going on with tariff concerns, or is Google dying? Whole bunch of stuff to talk about in that area, but still we're in a weird period of time where companies are kind of in quiet periods and there's not a whole lot of company specific news coming out right now, but sure we can fill the time.
I am confident of that as well.
Yeah, we always seem to go way over our time. So
I was going to say, you were saying a time before, I was like, I have so much to talk about. We'll see how that goes. I have put out requests for interviews. I like to do that as much as I can. It's a tough thing. I have gotten the response back, hey, we're in a quiet period a couple times, a couple different places. So, yes.
No conferences, no super interesting earnings yet, but still some stuff to talk about. So we'll dig in.
One thing I will say, totally off topic, my calendar for the rest of the year, for like the October, September, all those events that might be happening then, really kind of just filled up over this past week. Tannor with a little smile face. We'll see if I'm going to see him there saying, hey guys in the chat. Nice.
No, I actually, I won't be going to anything in the near term.
Oh,
but is it Robinhood's 80th investor event of the year?
Yeah.
I didn't say anything.
They shoot for 80 events a year. So, but yeah, I'm not going to be anywhere in the near term.
Sad.
Lots of live streams to take care of. That's what I'm focused on right now.
A lot of new all-time highs. Big Nvidia guy on the stream. We had a $4 trillion company. I saw your post earlier though. It was like Apple, for first $1 trillion company. Apple. What was it? May 2018. $2 trillion Apple, $3 trillion Apple, $4 trillion Nvidia. So congrats on that one. It was a good day.
Appreciate you passing the torch to me. Apple doesn't deserve it. Nvidia does.
Question: what's your Nvidia cost basis?
Well, it's changed a lot. So I've been purchasing a lot, so it's closer to about $20. But it was just a little over $5 a while ago. Okay. But I've recently purchased a lot, sold Tesla, and so the cost base has climbed quite a bit.
It's pretty good. What 8x is not too shabby.
Yeah, been acquiring since 2018. So
investing is easy, right?
It's by far the best pick I've ever had, and nothing really comes close. So I guess if in the Warren Buffett thing, you really only need a couple of those, but that definitely would go on my whole punch card and never let it go.
I have like one of those app tracker or like those portfolio trackers, and Nvidia is definitely the one with the biggest percentage gain out of any of them, like by far. Second is Apple, though.
So what do you guys think is going to be the company that hits 5 trillion first?
Palantir.
Not a bad guess.
I'm completely kidding.
SoFi, we're getting over 20 as well. So maybe it's SoFi about to take over the world.
Only 4.88 trillion left to go for SoFi to get there. So
there's no bet you can make other than Nvidia, right? I mean, like,
no,
what
I
are you
think
going to say?
There's another name.
What, Microsoft?
Yeah.
Yeah, maybe. But I feel like you're just playing the devil's advocate at that point. Clearly, there's momentum behind this name right now. If this market's going to continue, it's probably going to be led more by Nvidia and Microsoft. I guess if that's the argument, then I would guess you're saying you think the $5 trillion company is probably going to be maybe more than a year out. And if you're going to say it's Nvidia, it's probably going to happen within this year. Maybe a little. I don't know. Maybe there was this whole pullback, but I think in this market, if we continue, Nvidia will be leading Microsoft.
I don't own any Microsoft, and I'm still holding on to Nvidia. So I'm going to say Nvidia, but Microsoft is a strong choice as well. They're a phenomenal business. I mean, that's pointless to say, but yeah.
I think good macro, Apple has a better shot. I think bad macro, Microsoft has a better shot, just because structural tailwinds for software versus consumer hardware and versus, I mean, Tesla auto sales, which is another company, I guess you could say, has somewhat of a chance of getting there if everything goes right for them over the next couple of
Definitely.
years. But they're just so insulated to macro headwinds and things that can go poorly just because, I mean, cloud computing and software are such powerful secular forces in our economy that I think it's somewhat macro dependent, but that macro certainly cooperated for Nvidia to get there first. So I want to, I don't know. It's just investing is hard. I said investing is easy very jokingly at the beginning of the episode, and when you have 8x gains that you're sitting on after you averaged up several times, I just think these are the times when you smile and pat yourself on the back. And I'm not patting myself on the back. I'm forcing Tanner to pat himself on the back. But I don't know. It's just $4 trillion for a company is really hard to fathom, but it's going to be hard to fathom when we're crossing $10 trillion valuations and 20 in the future. So I'm saying a lot of nothing, but congratulations to you is what I wanted to say.
No, I think along the way, there was probably a lot of people that had to stomach the valuation of even Apple and many of the companies that have broken past that $1 trillion space. But
Nvidia is still in the mid 30s for an earnings multiple and a peg around 1, right? Or something like that.
Yeah, I think the peg's a lot higher than that. I think it's closer to like 3, isn't it, for Apple?
Oh, for Nvidia, I'm talking about Apple is like 3 or 4. Yeah, for sure.
Yes. Yeah. Nvidia is still around.
Tanner heard Apple and saw red. He couldn't get out of it.
Yeah, 33 times forward, and they're going to grow, according to sell side, 44% this year, 34% next year. So that peg is still under 1. So somehow, based on current estimates, it's by Peter Lynch's loose definition of expensive and cheap for using growth multiples, it's still cheap. So that's also crazy that it has done this over the last few years, and it's not trading at 50 times sales; it's trading at 30 times earnings with that kind of growth. So
we spoke about it last week, but I think it is important to highlight, like, if you look at what Meta is doing, putting in the most unbelievable offerings to new employees, $100 million signing bonuses.
You want to hear something crazy?
I don't believe that's real. I guarantee you on the earnings call, they're going to come out and say the $100 million figures you guys see floating around are bullshit. But that's just my opinion. But I go ahead.
Bloomberg article out last 10 minutes. Show the screen. Meta has made unusually high compensation offers to new members of its super intelligence team, including a more than $200 million package for a former Apple distinguished engineer. The new Apple person they just hired. Now, it's not a signing bonus, 100%, but $200 million package.
If you get to super intelligence, we'll give you 180 million in equity. Like that, it could mean that. So right. I think just like saying like, yeah, they're giving $100 million checks for people moving to Meta, I think is probably, well, and Sam Altman's the reason that's like flying around as a rumor right now. But there's no way that they are handing out $100 million checks to people to move to Meta. But maybe I'm wrong. I don't think I'm wrong, and I cannot wait for that analyst question on the call, and I cannot wait for the response.
Let's say it's not true. I think the parts that are true is that you do see the names that are coming over, and they're coming over in droves. There is definitely a large expense right now for talent, and that's not for no reason. You know, obviously, Mark Zuckerberg is betting everything right now on artificial intelligence and what he believes will be getting close to unlocking some form of super intelligence, and he wants to be right there. I just don't see a world where the infrastructure plays don't end up doing well. That's why I haven't sold or trimmed down on my NVIDIA names just yet. It's coming up on 50% of my portfolio. So as it passes 50, I'm going to make sure that it doesn't go above that. So everything will be cash. Like I'll just trim and trim and trim. But I really do think that this is going to continue to grow over time, even more wildly than what Wall Street has currently estimated right now.
I mean, it will be a cycle. There will be a peak and a trough. I just don't think, and based on everything you're saying, I don't think we've even sniffed out where that trough is, or where the decline starts to come from. Just from, I mean, some of the anecdotes we've talked about for the last several weeks since we've been doing this very charmingly unnamed show is I mean, sovereign AI deals flying off the shelves left and right. OpenAI redipping into the Stargate project with Oracle to build even more gigantic data centers, and then every single mega cap tech reiterating their capex guidance, and these reasoning models consuming 100x to 1,000x the compute of one of the one-shot inference models that were, I guess now the legacy versions of legacy, I guess is what we'd call the generation one LLMs. But just everything you hear from their customers says we're not done and we're going to keep leaning in. The only thing that I'm interested about is you hear from Broadcom, you hear from Marvel and a couple of these other players about the custom and also Google with their TPUs, these more the less general purpose high performance compute chips and ASICs is the name of one of them, and then TPUs is the other one. Basically, just more customized, more use case specific chips that don't do as much but do one thing very, very well. And
Yeah.
it'll be interesting to see how much shine that can take off of the GPU ramp. But it really looks like, though, at least for now, and I don't really see signs of this changing all that much. Those seem very complementary to what NVIDIA is doing, and just really examples of companies with maybe less pressing or less important or less vital core, whatever word you want to use, compute use cases where they're getting away with using ASICs or using TPUs or using these not as highly performing chips for use cases and for workloads that maybe don't need the very best thing, so that they can pocket a little more money because all of these products are cheaper than NVIDIA GPUs. So I think that doesn't mean NVIDIA is not going to continue getting the lion's share of all these orders, and I think they're going to. We'll see how AMD does with their product launch later this year. But I mean, it's crazy to look at NVIDIA's data center revenue ramp over the last few years and then follow that up with the idea that I don't really think this is winding to an end right now, and it doesn't feel like it's winding to an end right now. So
I think the most clearest case that it's not is that you called them legacy LLMs. That's the speed of change that we're seeing right now, and it's just, where is the end? Is it even in sight? And I'm going off the likes of Andy Jassy and Mark Zuckerberg, and they're saying this is just getting started, and it doesn't seem to be a couple crazy people that are thinking that's the future that we're heading into. It seemingly is every single person in this space. So
you don't hear from any. I mean, you heard a couple sell side notes come out and say, well, Microsoft's canceling some data center leases or Amazon's canceling, and then both of them immediately came out and said, we reevaluate data center footprint constantly, so we're constantly adding and subtracting where it makes sense to maximize return on investment. So just every time there's that hint of, well, maybe it's kind of starting to top out, there's three more hints that come after that, well, no, it's not. So,
well, even NVIDIA specifically, like they had the OpenAI Google deal that ended up coming out, and then that got cleared up. So, NVIDIA even retweeted that article to be like, guys, they're not going anywhere.
It went from they're deploying large clusters of Google TPUs to they're kind of experimenting with what these TPUs might be able to do for some workloads. So it's way. I mean, a lot of people ran, including myself, ran with that article from The Information. I think it was 2 weeks ago, and then it was earlier last week or something. They came out and said that's not right. So just more evidence of that moat being quite mighty.
Evan?
I've said this in the past, and I know I don't think is kind of the same ways, but like the being on the bleeding edge of the semiconductor space, I believe is one of the best places to be investing for the next foreseeable future. And, that's kind of what got me into NVIDIA. What was it, 2019, 18, 20, whatever, 2020, and being able to hold till today. And back then we were talking about crypto and wanting to try and get rid of that so that all these gamers could have their chips, and this was a wholly different business. And I very much believe we're in the first innings of whatever AI is going to become, and it's probably going to change what we're going to be. But what AI is and how we enter it is going to change aggressively, was what I'm trying to say. But what I do know is semiconductors, GPUs, TPUs, whatever we want to call it, is going to be powering all of that. And owning the company and companies at the edge of that is really valuable. So now, I won't lie to you, now NVIDIA here at 4 trillion, I maybe started to more think, okay, in this world where NVIDIA is here, who else needs to be brought along with that? There's the people who are manufacturing NVIDIA's chips. There are the people who make the machines that make the machines to make the machines. There is the energy side of it, like my thought process is this probably is not going to be a good time for renewables outside of nuclear for the next couple of years. But coming out of this, you get a good base, you buy at low levels, and maybe we see a resurgence when we need a lot of more energy in the future. So energy, the chips that make the chips, there's different areas of this, but I want to be invested overweight towards the companies that are in the bleeding edge of the semiconductor space. And I think that's going to be a good place to be, outperforming the market over the next decade. So right now, I think it's Nvidia. We'll see how that changes. It's hard to stay at the top of the mountain when you're waking up in silk sheets at 4 trillion. We'll see. But yeah.
I mean, that is definitely true. But Jensen could have stopped I don't know. I just think they have a mission that is above just hitting some sort of monetary goal. I can't imagine
Everyone
going
talks.
from 50 billion
Everyone
to 100
talks
billion.
about the mission. Sam Altman loves his mission. Meta, $400 million signing bonus. What are you going to do? You're going to come in and take that? F your mission. No, I'm kidding. But I don't know. There's
Is
something
it a
there.
different mission though?
What's the mission?
Obviously, take the money, but you're just going and they're all rushing towards the same goal.
Yeah, no, that could be it. Is we're all rushing towards the same goal and having the same thing. You join Elon and the mission's going to change 75 times. So what am I there just to build something? What else am I going to do with life? We could talk about cool people building stuff or do it. I choose to talk about it because I can't do it.
So
if you can't teach, and if you can't teach, consult. Perfect.
So in terms of maybe getting an angry tweet by criticizing them, Elon Musk, what's going on right now? Is Tesla even investable for you guys? Is there too much political risk? Is he going to say, "Shut up, Brad," if you potentially say something that might change something in the business?
Dan Ives did not earn himself any leeway or patience at all from the years and years of passionate defending he's done for that company. That was, if anyone was wondering what we're talking about, he basically laid out a 3 or 4 point plan of maybe curbing the autonomy and ability for Elon to pursue politics and hopefully not intermingle that political involvement with his company. And Elon just responded, "Shut up, Dan." So I think I don't want to interpret this incorrectly, but I think that means he disagrees with what Dan is saying, and I think that means it's full speed ahead for him in the America Party, I think they called it. So I mean, for me, there are 5 reasons why Tesla is in the too hard pile, and this just adds another. So I don't know. I don't.
The other 5 or 4. That was very specific. Let's go.
Yeah, well, I was going to say 50, but then I didn't really have. I didn't. Well, I mean, for one, you don't really have a core business right now that's healthy, and I mean, there have been reasons over the last year via rate cuts and maybe some positive anecdotes from other companies where you'd think that auto sales start to look a little bit better. That business, which still drives their top and bottom line, is still shrinking year over year after shrinking all throughout 2024. It's a matter of placing most of the value, the company's current value at whatever its earnings multiple is right now on products that are not scaled at all and are not proven at all and have not been rolled out at all. And it's a lot of speculating you're doing for a gigantic company trading at a very rich multiple. I will follow every time I say something like this. I will follow it up by saying, even though his timelines have been wrong for most of his CEO career, his promises eventually have been right, and people willing to do that speculating and willing to say he'll figure it out eventually have been handsomely rewarded and deserve a lot of credit for that. Just for me sitting here right now and thinking, how does risk reward look for a company who with a gigantic mega market cap, whose core business is not certain, and what the core business is going to look like in 5 years is anybody's best guess, including mine. I just think that there are easier places to play. Not to mention the fact that auto is an extremely cyclical business, and I usually like avoiding cyclical businesses. Aside from, I guess, consumer credit, you could rightfully say is me breaking that rule, which is part of the portfolio. I guess I'll leave it with, what was that, 3 reasons or something like that. So I guess my hyperbolism got the best of me, but But yeah, this is just another. I like quiet CEOs. I like CEOs who execute and don't talk very much, and don't invite attention to themselves, and don't don't persuade or tempt or motivate enemies to be formed, and to come after you. And I just Elon is one of the most powerful people on the planet, if not the most powerful. I mean, you saw the impact he had on the 2024 election. I think anyone saying that wasn't him wasn't paying close attention, because I do think it was him. But in terms of an investment and risk reward, and putting my money in something I think is going to be higher in 5 years, or 2 years or 3 years, I sleep way better in other companies and other positions, and I just have so much more confidence in risk reward for other companies in this one, that I continue to root for it from the sidelines in the most cliche way I can put it, just because it is a great American company and it does employ a ton of people, and it is an extremely important enterprise for our economy and for our nation. But in terms of where I'm putting my money, I don't want that gigantic headache, and I see that investment as a gigantic headache with daily headline risk that I need to track and contemplate. So yeah, that's why I'm not in Tesla. And if you guys want to pull up the 5-year stock chart and say, oh yeah, big shot, you're not in Tesla, look how far it's up. You're right. Like, you guys are 10 years probably, because we're comping versus 2021 there. So that was the pandemic bubble, but it's been an amazingly successful investment. So hopefully, if there are bulls listening to this saying he's an idiot, he doesn't know what he's talking about, you can just be happy that you've made a ton of money, and be okay with someone dissenting opinion. But wow, somebody actually agrees with what I'm saying. I'm sure there are more people who disagree with what I'm saying than what I am saying. But
There was
yeah,
101 comments that said otherwise, but I picked out the
there
one.
were definitely more comments that said otherwise, and I hope you guys keep. I hope in a year you guys can all say, you're an idiot, you were wrong, I made more money. Like, I hope every stock goes up. So that's my opinion, and I hope I'm wrong.
Yeah, I mean, I do think that Elon is potentially the greatest entrepreneur that we've ever seen. Probably one of the best time managers. That sounds weird, but like, I think Tesla has some of the best products. The next car that I'm going to have is a Tesla. Everything lines up for it to be a stock that I absolutely love. And then you look at current valuation and see that a lot of what they're working on is priced in, or maybe it's not to some Super Bowls, and that we're underestimating the size of Robotaxi and the size of Optimus. But I just find it hard to stomach versus other investments in the market. Like I said, cash or Tesla, it's Tesla every day. But versus less anxious investments in the market, like Brad said, in terms of companies that you can sleep well with, Tesla is not easy to sleep well with, because you don't know if tomorrow a product or what Elon is saying, or I was going to say what a product is saying on X, because even that is lashing out, saying some pretty crazy things right now. I don't know if I'm allowed to say it on YouTube, but yeah, it's just very interesting how much trouble this CEO can get himself in versus other CEOs that are seemingly pretty clean.
And one more thing I'll add, we had the who gets to 5 trillion first conversation. And despite everything that I've just said, if they do figure out Robotaxi and they do scale at lower marginal cost than everyone else, if they do have an Optimus product that is even remotely close, like a little kind of in the ballpark of what Elon is saying it's going to be in terms of market size and opportunity, that can be the first $5 trillion company. And that can be the biggest company in the world. If what he's saying is sort of accurate, then it can be.
The
We'll
problem
see.
that I have is, if you're picking a third party, that means you're not picking a side, and both of the current legacy sides are going to disagree with you. And as we know, the propaganda machine will create, if anything goes wrong with Robotaxi, anything goes wrong with Optimus,
Oh yeah,
the media is so heavily favored in not one of the two parties, both of them, towards a smaller but hungry third party, or whatever he's trying to create here. And even though I do actually think the debt is probably one of the largest problems that the US should be trying to tackle, it's just hard that it has to be the person that also has a public name associated with him as CEO.
Yeah, I mean, he has figured out a way to piss off both major political parties a lot. And in a perfect world, that would be irrelevant. It wouldn't matter. We live in a free economy. Whatever politicians think of some person or some opinion should theoretically be irrelevant, but it's not. And I think you just have to kind of accept that and stomach that as part of the overall investment case at this point, if you want to own shares.
Evan, you
Yeah.
you gonna buy some Tesla, or what are you
Ooh.
thinking?
Am I going to buy more at this level? I would probably need to see a drop. Am I selling the Tesla that I have? Not at this point. I will say, first of all, Brad, I don't know if we scared the bulls away or something, but I've seen pretty much everyone in the chat agreeing with you that they
That's
are
wild.
kind of.
This must be like we must not have a lot of Twitter people in this group right or in the room right now, because I can't say anything negative about a Tesla on that site, or it's not even. Whenever I say something remotely not positive about it, everyone's like, "Oh, you just hate Elon and you think he's evil," and that's just not it at all. Like, I think Elon is one of the most important people in our country, and I think he has done so much good for creating the only scaled profitable electric vehicle company in the United States and leading that by a mile and a half. I would just love for him to be that amazing person and to do those amazing things and to go to Mars and to build hypersonic jets and to build tunnels throughout the United States that allow us to get places far more quickly. All these incredible, amazing things he's doing. And to me, the politics is just such a distraction, but in his mind, it's the most important thing he's doing, I guess. So it's just a difference in prioritization. I'd love for him to keep on this incredible journey and incredible career he's built, because I think that would lead to so much amazing shareholder value across the board. Boring Company, SpaceX, XAI, which I guess is the same thing as X now, Tesla. But he doesn't agree with me, and maybe he's right and I'm wrong. And politics is a good place to spend his time. I
Do
don't
you
know.
think
Yeah.
that it's more of like, I mean, the richest person in Venezuela or some other hyperinflation country, the richest person still doesn't look all that rich after a crazy hyper inflation period, right? So, do you think that it's almost the best move for his overall net worth is to secure the land that is like where he runs all of his companies, almost the total parent company that oversees SpaceX and Tesla and everything that he's building everything on? If he believes that the foundation is shifting, potentially that is his existential threat.
I just think that and debt is a very serious issue, and the fact that the budget's going up is not a good thing. But I just think we have been hearing about, well, that debt ceiling is an existential threat to growth in the economy for such a long time, and we did just print an ungodly amount of money in throughout the pandemic, and are still now seeing inflation pretty quickly, not linearly, but pretty quickly race back to 2%. So I think it's almost more important for the United States to remain that reserve currency of the world, to remain the best balance sheet, fortress balance sheet government in the world that everybody wants to buy the debt from, because they know they'll get that few percent of interest, and they can sleep extremely well at night. I think that is probably more important to his overall net worth and guarding his overall net worth, than cutting some spending here and there. And I think that's also a very important part. But for where he's sitting right now, I don't know. I think status quo has treated him pretty well over the last few decades. And I think wanting to break things from a fiscal point of view I do see exactly where he's coming from. I do think fiscal responsibility is extremely important, but I don't think that's his best source of time. Maybe
Don't you
he
think those
very
two things are
quietly
pretty
just like,
tied?
sorry, go ahead.
Don't you think those two things are pretty well tied together, though? Like the U.S. having the reserve currency and also them being able to like pay their debts. Like if they can't afford or to pay their debts and treasuries end up going default, we will quickly not become the reserve currency anymore.
Absolutely, but we've been doing that for a long time. We've been crossing our debt ceiling for a very long time and raising it and raising it. And for better or worse, the rest of the world has been lapping up these new dollars and these new bonds and this new currency with two spoons and saying, "Thank you, sir. May I have another?" So that is the current status quo. And I think maintaining that for him is probably a better thing than not. But yeah, absolutely. I mean, the inflation for him isn't an irrelevant risk at all. I just think be the CEO. Maybe like donate quietly if you want to, and maybe steer third party, but don't make that your identity. Don't make that your mission. Don't make that your North Star. Make these amazing companies that you've built for such a long time your North Star. And maybe this is just media running away with what he's doing, and he is hyper focused on Tesla. And every time he says something about something else, everyone just takes it and blows it up 1,000x. But to me, it just seems like another distraction to not need and unnecessary distraction.
What I will say though, because like when you go any number metric, you're never going to be like Tesla's this great stock. At some points, be who you can afford to be, and if he can bring humanoid robots and if he can be a leader in all these AI areas that he's actually trying to get into, then everything that we are talking about here does not matter, because what he was able to do beat what the cost of the headaches along the way. So
I totally agree.
he's going for large enough opportunities, and we'll let him fail until he doesn't. So that's why for me, when I just look at this position, I'd rather hold a little bit of it, and because I'd be so upset if it went off and I was here thinking this and it didn't happen.
I would say let him keep succeeding until he doesn't, because even though instead of keep failing until he doesn't, just because I mean, even though, yeah, you could say that and I know I'm getting probably picking through words that are like semantics and not super important, but he is, I mean, timeline's bad, but delivering on his big promises and what he says will happen, really good. So just keep being that, keep doing that, keep doing that. The world will love you. You'll make a ton of money for your shareholders. You can use that money however you want. But at the same time, he is him. So he can say, I don't care what you think, punk. I'm going to go do whatever the hell I want. And he's earned that right. He's earned that prerogative, or that's his prerogative. But it's my prerogative to say, I don't see eye to eye with that, and I want to put my money somewhere else.
One thing I also will say is, you look at that Tesla valuation, clearly there's a lot of speculation going on. When you look at some of these AI valuations, and I do want to talk about Google and Perplexity and OpenAI, but it kind of brings us into it maybe. These are very large valuations. The market is willing to speculate talking about AI, and it's currently evaluating hundreds of billions of dollars of opportunity when there isn't profit there at this point. So the market is telling you it really thinks this AI thing is going to lead to some massive companies and step changes. So it's really impossible to see that coming into it. Is this going to be a step change thing, or is this just going to be something that kind of gets added in and everyone becomes a little bit, more efficient, a 10% more efficient, which is what I think the clear immediate thing is. But is there that next thing that we can't see that AI comes in and creates some step changes? But I think the market is telling you it thinks might happen based on these valuations and in these areas going after these big problems.
What did you say, Tanner? The scale AI, the valuation per robot. You gave some stat.
Figure
I don't want to put you
AI
on the
per
spot.
robot they had or something created, maybe.
It was like you were talking about UPS and how. Oh, I'm sorry.
No, Amazon, yeah.
That's on me. That my bad. But
I don't remember what you're talking about.
yeah. So but in terms of like valuations and the space right now, it does feel a tad bit like .com-y a little bit, but then I mean there were incredible gigantic companies that emerged from .com after a pretty painful correction. So I mean I don't want to predict that for all these pure play AI companies that are raising at absurd valuations, but it does seem like there aren't going to be 100, 200, 300 winners with all very similar products.
Well,
there's going to be a ton of consolidation. There's probably going to be a ton of multiple contraction, and then the few dozen or 2 dozen or whatever who actually create great product market fit will end up being those great investments. But I don't. It does feel a little bit frothy right now. It does feel like you can say .ai on your company, and that nets you a 2x valuation. Just like putting .com after your company's name in 2000 or 1999 did the exact same thing.
Yeah.
So there are parallels. But then there are parallels, but then you still have OpenAI. I was going to say OpenAI is doing a ton of revenue, but they're paying out even more in stock comp. So like, but yeah, it does feel frothy and a little bubbly right now. But I'm sure there will still be great investments that emerge from that froth. There will just be some not so great investments that do too, just like most of the time.
It is interesting, like, because Nvidia hit a $4 trillion valuation, everyone wants to think that that is some sort of Cisco event or something along these lines. But if people actually go back and look at the multiples on earnings and how pulled forward their expectations were, Nvidia's trading at like 30 plus times forward earning. Like, I mean, this is nowhere near what Brad's more talking about is a lot of the smaller names this time. I mean, maybe you could pick out some software names that have very, very strong multiples
But the
that
pure
are
plays,
public, but
yeah, you're right. I'm talking about the pure plays, and yeah, sorry. Let me go ahead.
no, I agree with you. And it'll be interesting to see how everything plays out. There's a fully real opportunity here, but everyone wants a piece of the newest player, and they're willing to pay a lot for the future. And it's just there'll be winners and losers, and I hope people remember that. You can't just throw a C3 in front of your name and be a winner here. But Google, really quick, and then I also want to talk on SoFi. We got to give some credit to the bulls who have been holding for 4+
20
years.
plus. Congrats. That's awesome.
Thank you. Long time coming.
How long have you held for, Brad? Have you been around since IPOE?
Yeah. But it was one of those things where very little disposable income until I feel like I got a little fortuitous in timing on when the disposable income really came in 2022. But I think I owned a little bit in 2021. It's been a while. But yeah, I mean, now it feels pretty good, but it did not feel good for a little while. So patience, I guess.
Just really quick, is this overblown, or how do you look at SoFi right now? Because obviously the change in just the last year is essentially a triple on the stock price.
Say that one more time. I'm sorry.
So SoFi is essentially tripled, or a little over a triple in the last year. Let me check.
Something like that. And I mean,
How many monitors? Do you have like a TV above you or something?
Yeah,
Me?
I've got lots of screens.
Two. Nice. Sorry, I just saw him looking up to the left. Go, Brad.
You can say, yeah, tech platform is like pipeline signs of that going pretty well. 10 plus deals for contributing revenue in 2026. A few more in late stage deals probably coming soon. But they've been talking about that for a few years. So maybe it's just a matter of belief. Maybe it's a matter of favorable macro, which I'm 100% certain is contributing to at least a small degree, and probably more than that. But it's been kind of stars aligning of financial services rapidly inflecting in profitability, even before credit card it has been scaled, even before Invest is even 50% monetized. The lending business macro cooperating much more favorably in the lending platform business, enjoying extremely strong capital market support because they delivered strong loss ratios and because they delivered strong repayment trends throughout that pretty aggressive and pretty chaotic macro cycle. So now they're being rewarded for it. And you hope that next time things do sour because of that history, because of that ultra prime niche, because of how picky they are with underwriting, that they will fare better. Not perfectly amid poor macro, because consumer credit cyclical. They're not immune, but I think they will be more insulated than most companies catering in their disruptor bucket to more subprime credit and getting a little bit more aggressive. And then the anecdotes with the tech platform about how you have rate cuts. They're wrapping up Technisys integration. They are wrapping up a massive go-to-market pivot. I just think stars are aligning for this company in a way that hasn't happened for a few years. The tariff trade war spat almost got in the way for a little while, but it seems like sentiment for the impact that's going to have on the overall U.S. economy and SoFi, outside of a few countries where we're still dealing with some issues, but it's kind of irrelevant for them as long as there isn't some economic contagion stemming from it. Things are just more favorable than they've been for this company, and they hunkered down and battled and got through a pretty terrible period in terms of exogenous backdrop for their company. So kudos to them, and it does feel pretty good. Tannor and I won't be right about everything. But we were told many times about how stupid we are for believing in this company, and how fair value accounting was toxic and poison, and about how Anthony Noto was a shady huckster. And I guess he's not.
Yeah, yeah, right. Now the market is trying to do their fair share of fair value accounting, actually bringing it up a little bit this time. That was a joke on the fact that I think that SoFi should be above $20 a share. But
One thing on SoFi, by the way, after watching the Robinhood Coinbase move, I feel like a lot of people went to Webull with hey, these ones are doing this, so let's go over here. And maybe their mistake was not thinking about SoFi first. And if the theme is less like, hey, here's a broker, and it's more this whole wealth transfer theme and kind of being the platform of the next generation. And I know Webull kind of is, but it's also a Chinese-owned broker, and I don't know how much that necessarily excites people as much as a SoFi. So that was where my mind went seeing SoFi hit $20 today.
Yeah, I think you can say there's been some news in student loan world. There have been some items that have kind of crept up. They added new support for private investing. They've had it. They've already had it, but they added more. And it was
Invest
called
America, baby.
yeah. Student loan debt forgiveness, which I don't think really should have been seen as a realistic scenario under the current administration, was completely shot down. And you kind of think
And the
shouldn't
limit caps,
sorry,
right?
say it one more time.
Or the student loan limits, the cap on how much you'll be able to take out per degree.
Right. Right.
Yeah.
What was it? $50,000 for law students or something like that.
Yeah, it depends. I forget all the numbers, but I think at most it's something like 257,000.
Yeah, but for SoFi's, for the core SoFi business, which is mainly undergrad, and that 60-70% market share they have, you've seen in the news about X million student borrowers are about to start having their income withheld because they have repayments to make and they're late on them. And it just seems like, I'm completely speculating. I don't know if this is actually going to happen. I don't have any reason to believe it will happen, aside from the fact that there's one company that has a 60+% share of the refinance market for this industry, and the federal government should be very, very interested in working with that company to lower repayment rates for borrowers and to help them, so that the U.S. consumer that powers 70% of economic growth can be healthy and make our GDP numbers look better. But who knows if that'll happen? But it makes sense to me.
Yeah, 60 to 70% in their credit box, which
right. Thank you.
Yeah.
Right.
Which is an unbelievable stat. It's absolutely incredible every time I hear it. But the last time there was a bunch of competitors after the moratorium, they kind of all stepped away, or at least a lot of them. DFS, Common Bond. There's other names that I don't remember, but yeah, it's going to be incredible, and they're very well positioned. But I think the market honestly believes that SoFi is more of a student borrower than they actually are. I mean, if you want to label them down to one product, it's personal loans. And even then, I still think that there's so much work there for SoFi in terms of whether you look at interest only or the sort of smart start interest products on personal loans for debt consolidation on credit cards. That's really where I think their bread and butter is going to be. And there's going to be or at least there could be so much to go there. And then with the loan platform business and everything that Brad talks about all the time, there's a great upside story for SoFi that could be playing out here. That's why bulls are happy and why we've always stuck to it.
Yeah. And I think one other thing that I will say, they have executed flawlessly through the last 4 or 5 years. Student loan moratorium, no problem. Five points of rate hikes, no problem. Regional banking crisis, no problem. I think I already said 5 points of rate hikes, so I was about to repeat on a no problem. But at the same time, you still have a little bit over half of their business coming from the lending segment, and then you have another 10-15% coming from lending platforms. So really 2/3 of the business still coming from consumer credit, still reliant on capital market buyers. So I will say that while they've done extremely well, macro cycles matter more for this company than most of the other companies that I own. So just it's more important for SoFi than for a pure play software name, for a Microsoft, for even for an Amazon that has a consumer facing marketplace business. Macro cycles matter more for consumer credit than pretty much any other part of the economy. So they will have periods of not so pretty results. They will have tougher times, but right now they've earned the right to really flex their financial muscles, because they have been so conservative and they've been so responsible through the not so tough times to put their balance sheet and their capital ratio cushions in a position where they can really rev the engine right now. and that's what we're seeing. And I think we're gearing up for probably another very good quarter, and probably a lot more good things to say about the rest of the year. And another step towards their 2026 targets as they keep marching towards that 3-year plan they laid out, end of 2023, I think, something like that. But yeah, not exactly on that path. We talked about all the issues with the tech platform, and that has led to that CAGR estimate being lowered a little bit, the compounded annual growth rate estimate being lowered a little bit. But the other two segments have more than picked up the slack. And not only that, but they picked up the slack while also becoming less tied to overall balance sheet growth, which makes it more asset light, which makes it less risky, and which makes it probably rewarded with a higher multiple than their core lending business.
Which I don't think it is right now.
Say
I don't think that the market is giving them that multiple for the amount that they have shifted into more fee-based revenue.
That's fair. I will say it's pushing 60 times forward earnings right now.
Things are getting
the
good.
Ratio is still. Let me get a real number instead of just guessing. 65 times forward earnings, and EPS this year, 87% growth, 64% growth next year. So what is that, like a 75% compounded annual growth rate, a little higher? So the PEG is still around 0.9 or something like that. So it is still very cheap, but this isn't going to be. I don't think this will ever be like a CrowdStrike where they're rewarded with 150 times free cash flow or anything like that. But not that you're saying that, but it has gotten a little more richly valued over the last.
Over the last little bit, but that's honestly because I think that the macro skies are as clear as they've ever been. SoFi has never had a period where they can just be themselves and run, right? They've always been facing some sort of massive macro problem. And now the market's sort of rewarding them because, this company that's compounding at a 30 plus, well, not recently, but what I think they'll be able to hold up in the future, 25% plus, is just something that they can do without the worry of potentially the fastest rate hike increases that we've ever seen in history, or a position where their entire largest business of student loans just gets taken away from them. Or and by the way, all throughout those entire periods, they still grew year over year, right? Like they continued to grow through the worst of environments. And I don't know.
And the only other thing I'll say is that 87% growth this year and 64% growth next year gets you to 46 cents a share in earnings. That's analyst consensus. SoFi consensus is 55 to 80 cents per share in earnings, so 67 cents at the midpoint. So near around 50%, even higher than that. And they've been pretty damn good at modeling forward expectations and figuring out a way to find growth and profit from other segments when one isn't performing as well as it needs to. So I will take the over on that 46 cents in 2026 for consensus estimates, unless macro just falls off a cliff. Always possible, but yeah.
Yeah. What did you think about the comments that Anthony Noto made recently about, and I mean, it makes sense, but still, we always end up beating expectations. Their longer term expectations, especially from Noto recently, have been extremely bullish. The 50 million targets, the top 15 tech company comments, like these things. But in 2026 EPS, they said, if we are growing as fast as what we are hoping for, we'll hit 55 cents of EPS. And if things actually start to slow down, that we should be closer to the 80 cents.
Yeah, I just think it's about reinvestment opportunities, and they adjust to those very, very quickly and fluidly. So if the credit card losses are starting to ramp because macro is souring and the consumer is really struggling, they will pull back significantly on growth, and they will lighten up on growth and balance sheet risk, just to put themselves in a position to where they can invest and take advantage of good times with the highest ROI possible. Because with those finite dollars they have, they're not gonna just shell them out in any environment. They're gonna be very picky about timing up these investments and making sure they're leading to more profit dollars. So I think that's just him saying, we will, if macro is amazing, we will forego near-term profitability to grow revenue more quickly so that we can harvest more profits down the line. And if the opposite shakes out, we will go into cost preservation mode and margin optimization mode until macro brightens again.
But do you think that those estimates will be accurate? That even if we're trucking along at unbelievable growth rates that will hit 55 cents of EPS, because like the Wall Street's not believing that at all. I think at the midpoint that I saw in Seeking Alpha recently was like 51 cents. Something
Yeah,
like that.
no one thinks they're gonna meet their estimates, but I think I'd be surprised if they didn't meet the low. Because they have shown you over the last few years that they have a lot of autonomy and a lot of strings that they can pull in terms of leaning into growth or leaning into profitability and shifting in and out of different priorities. So I would be surprised if because they talk so much about meeting their promises, because they talk so much about how important forecasting and building trust with Wall Street is, I would be surprised if they didn't meet the low end of their guide. Just because they found a few more growth opportunities. I do think there are probably some guardrails in place to make sure that they're investing as heavily as they can while staying within that range. But I'm guessing, I'm speculating just based on the information we have available. So I don't know that for sure, but that would be what I think.
Evan, do you have any comments on SoFi? And if you don't, do you want to take us into Google conversation? Then we can wrap.
I got nothing on SoFi. I will say your chat's being kind of weird. I don't know if this is what they always are. This one guy has the same comment about SoFi. I'll leave it at that.
I don't even think it's showing up. I think that's just showing like if things are being removed, if people are being vulgar, it doesn't even show up on YouTube's end.
I'm seeing some of them. He cheeks a lot, Mr. Jack Cotter. I didn't want to.
Yeah, no. I know.
Also, another question. Sorry, the donation earlier, is that just like, are they going to buy that back or something, or is that just like they sent it with that comment and it's just your money now? Fair enough.
Yeah, they donated that same last time to say, would I go to a Diddy party if these stocks are running, and now it's becoming a trend of, would you go to a freak off to gain insider information? Absolutely not. It's not even worth acknowledging.
Just do what Nancy. Just follow Nancy Pelosi's trades if you want to. If you want to trade on insider information, you can do. You can. What is it? The autopilot app. Do and that was that a free advertisement?
Well, that's a month behind, so
okay.
Still get a better one. There. Who is this? Two SEC Edgar employees. They were apparently going to flee to Hong Kong. Allegedly, they said they weren't, but I have no idea. Don't sue me. But they were trading off inside information off of a couple stocks.
It's leaking into sports too. Did you guys hear about the Guardians pitcher who basically told all of his buddies, "Hey, Hammer, first pitch of the inning is going to be a ball," and then he threw it like he spiked a pitch into the dirt, and I don't know how many times that's happened, but and then for my beloved Detroit Pistons, I mean Malik Beasley was he was gambling to a point where he couldn't foot the bill for $100 or $200 dentist appointment, and he was keeping him on the hook. So I mean, $60 million contract at age 28, and you are broke. I mean, geez,
he needs to become an AI. He needs to become an AI scientist.
Yeah, he needs to find another NBA contract probably, and I'm sure he will. But yeah, insider information is tempting, but probably not worth it. Sorry for the segue into.
No, I brought us here. We've dodged this Google thing a bunch. I've even seen some of the comments too. I'm
not acknowledging those comments, and then you drag them back, so you forced me to acknowledge them.
Jack he was persistent though. He deserved it. Literally from the start, there was callbacks. Good for you.
I've actually started to do a thing with donations where. With my portfolio and everything, but if someone donates, I don't just like taking the money for anything. So I will buy whatever stock that they want me to buy with that money, even if it's a fractional share of it. So we've created almost like a little community portfolio of all the donations that have come in that people are telling me to buy SoFi and Clove and ASTS and all these different things. So we're creating a community-driven portfolio. It's my portfolio, but they're running it for me.
Cool. So are we accounting for the Google fees and like taxes and stuff?
No, I'm taking that on the chin. It's a donation, right? I'll take
it's a fun time. Yeah, it's a good thing. It's a good thing.
Yeah, even if I walk out with 80%,
so
I think it's just fun.
What are you buying with that to donation earlier? Any insider trades?
No. No, I don't want to. There's a bunch of rules, but I'm not doing it for less than $10 things, and they have to say what I should buy, not just.
All right, I'll send a
random Diddy party.
We'll maybe get some Honeywell in there. Google though. So I think what the story today was around these browsers launching. Perplexity, they launched their Comet browser. A little later, OpenAI released a story that they are going to be releasing their own AI-powered web browser. And I have some thoughts. Now, first of all, I will say I might be a little biased. I am working with Perplexity, not on this necessarily specifically, but just in general. And what I will say, when I was listening to the videos, this Perplexity Comet browser is a fork of Google Chrome at this point in time. And so you could view this as, hey, we're going in to replace Google Chrome, or you can view this as, hey, this is what Google Chrome can be when its in-house powered AI tool really comes up and becomes a thing.
Do you mean that it's just built on Chromium? Is that what you mean?
Yeah, it's like if you when you go in to use this Comet Perplexity browser, at least the initial kind of people with the betas, like you would sign into your Google Chrome account, all your stuff would be kind of ported over, like all your logins and stuff. He called it a fork of it. I don't know the technical terms, but the guy who knew what to say said that. And so, but kind of insinuating that this is kind of taken off of the code there, and I don't think it's as very different as other people think. Now this is different than the search browser, so maybe that's why it came back a little bit. I don't know. I did title my thing "Is Google Dead?" but I don't understand that conversation that much because Google's doing this AI stuff. They're a leader in the AI space, and their market share is definitely going to be infringed upon as like what is the moat in this area. It's kind of being put up for grabs. Yeah, but to think they're going to go to zero, I don't see how you can make that argument.
I find it hard to believe that. So, a company that's building a new AI search browser on the exact same source code foundation, Chromium, that Google developed, without the distribution that Google has with 6 products with 2 billion people, without the world-class research team, which I think DeepMind is one of one in my opinion, and you can see that in how Gemini shakes out on the leaderboards. And I don't know. It's hard to envision an extremely disruptive product built on the exact same plumbing with the asset that's used to make this plumbing better, not on par with the company also using the same plumbing. If that makes sense. That was a weird way to say it, but it'll be a flashy headline. It'll probably take some market share, but I don't think it's taking market share away from Google. And I made this argument several times. I think it's creating new market share because of the amount of querying that can be done and the type and diversity of queries that can be made with Gen AI versus core search. That I just feel like this is going to be extremely additive to the market. But there's also been some data. I posted this earlier today from out of Oppenheimer, talking about 3 out of 4 paid ChatGPT subscribers preferring AI mode versus ChatGPT. 60% of them find AI mode to be more helpful than ChatGPT, free product versus a paid product. And then we've seen so many charts shared throughout social media over the last few weeks about how Gemini MAUs are inflecting and growth is surpassing ChatGPT significantly. And I mean that's a base of 400 million, so it is smaller, but it is not that much smaller than ChatGPT, and it is growing at a triple-digit clip. So, will this kill Google? No, I think that's where I stand.
Yeah. Yep. No, I agree with you for the most part. I just Google will have to do a lot of cannibalizing of their own existing search business with AI modes or overviews or what have you. But the whole world, yeah. I mean, you've already summed this up, but it will definitely be interesting times. I am a shareholder. I am buying, but Google has a lot of execution risks here. Like they could drop the ball here very easily.
One of the things that I also definitely don't want to understate here. So in that review that I was looking at, that the CEO of Perplexity did retweet, the person was asking that same question of why would you do this? Like, what is even the point? Like, just go use Google Chrome, go to go on Google and then perplexity.com. Like, why are you doing this? And what he kind of came to his conclusion in there was that AI mode, like when you click into Chrome, what's going to be in your face first is Google's AI mode. When you ask Mark Zuckerberg on why he's building these glasses, he's going to tell you, like, we don't want to be dependent on the people who need to get us into the ecosystem, Apple. So that's what I think this play was, is it's less of the browser play, but it's when you're whatever browser you're using, that's the browser going to like naturally have AI built into, and they want it to be not have like Google be default. I think this tells you why Apple is, part of the moat there. But your entrance way into the system you want to be in, the internet, like your phone, the browser, whatever it is, owning that platform is pretty valuable.
Yeah, I think that's fair. I also think that that's a great place to wrap. We literally just hit 1 hour. So, ladies and gentlemen, thank you all so much for watching. What I think you guys should do now is head on over to X and follow the great and powerful Brad Freeman at Stock Market Nerd and at Stock Market News. Evan, these are some of the largest creators that create the best content on X, and I don't know. You guys are better at selling yourselves than me.
Yeah, Tanner's not going to sell himself either, but check the link in his bio. Check the link in Brad's bio on all this stuff. They got some great extra courses. So much free stuff going on, and I even see a couple of the donations coming in here. You guys are awesome. But these guys have extra stuff they're doing that provides a lot of value. And, donating is great, but you can also go in and be like, buy something of value that these guys are putting out a thing and thinks will help you out there. So you don't have to do it. But if you didn't know, they have cool stuff both in their bios. Check it out. Appreciate you guys.
Appreciate you.
Thank you all so much for watching. Really do appreciate your time. Bye for now.